What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we are going to be covering the SoFi stock and the overall market. We know that 2025 has been a very rough start, specifically 6 weeks of free falling due to macro related news, specifically tariffs. And it looks like around the last week or so, some stocks began to catch a bottom. And yesterday we got some good news that it looks like the big tariff announcement on April 1st is likely going to be delayed a little bit as well. Maybe some deals are being put in place. Who knows? We're really not going to be talking about that, but just know the market is still going back and forth correlated to macro. But guys, I think today is a great time to start the Q1 earnings 2025 countdown, likely going to be around April 29th. So we're looking at 36 days. And I believe with this massive sell off, 42% on the dot for SoFi, we're likely going to get a big run up heading into the Q1 earnings, 36 days away. I'm not saying we're going to get back to our 1842 level. That was the high we hit over the last 3 years. But I do think we should surpass $15 pretty easily. I said that last night on my Twitter that I really like the $15 level. But with the move today we already got, I mean, guys, we could literally be at like $14 by the end of this week. So some people were saying $16, $17. I'm not exactly sure. All I can say is that SoFi has been massively oversold. I mean, there's literally like 6 to 7 analysts out there with $18 to $20 price targets. Some people even have $30 price targets on SoFi. When you take into account that fee-based revenue, that's really what we're going to be talking about today, because it looks like Anthony Noto, as of right now, you got to realize, guys, this is the first time he's been a CEO of a company. He's really just been building up the foundation of this company, growing the members, growing the brand awareness. But as of right now, I believe he has learned inside of this market that you really need to go after what Wall Street wants, and he knows exactly what Wall Street wants to get this multiple a lot higher, guys. And that's going to be the fee-based revenue. And that's why you saw the stock really take off last year, because you saw fee-based revenue grow over 70%. Fee-based revenue has literally become 37% of the entire company. What happens over the next year if we go to 50%, and then in 2026 we're at 60, 70%? You're going to see the multiple continue to take off. Right now, SoFi is trading right around 4 times sales. I really like this company around 10 times sales, just going off of their growth rates right now. The members are starting to scale. If you get about 3.5 billion in revenue, you're looking at about a $35 stock price, okay? I think we could easily get that inside of this year, 2025, if we get the macro cleared up a little bit and we see GDP growth in the 1.5% to 2% range, beating the Fed's guidance of about 1.7%. Guys, I think we're going to go a lot higher from here. So SoFi has been putting up some pretty strong numbers over the last couple quarters, 5 quarters in a row of profitability. You need to realize that to get into that S&P 500 also, we need to stabilize around the $19 level, and also realize that we had that massive resistance around the $18.40, $18.15 level. So guys, when we break it this time, there's a chance we could launch to all-time highs of $28 or more. But understand, $19 gets you into the S&P 500. SoFi is heading into their 6th quarter in a row of profitability. Everything is looking really strong. Anthony Noto knows exactly what he needs to do to bring this multiple up. You know where he's headed, guys. He's going after the loan platform business, fee-based revenue. And we're going to talk about numbers that we could potentially see with the loan platform business over the next year or so. But understand, you also have 2 X factors right now with SoFi. And the X factors are crypto getting back onto the platform, and Galileo landing some larger contracts. You're seeing them land that hotel rewards deal. And there also is massive opportunity right now with the IRS spending and outdated technology. That could be another big home run for SoFi. Galileo, you've already saw them land a deal that's coming in place in 2026 with the Treasury. We are looking very solid right now. Those are your 2 X factors, crypto and Galileo. Don't give your hopes up. Understand these can turn around at any given time. You don't need to bet on that. You need to be betting on the loan platform business, because that's where you're going to see the big fee-based revenue jump, bringing your multiple further away from legacy banking risk to the balance sheet. So guys, on this sell-off, I didn't sell any of my shares. I like to keep my portfolio position like 85% of pure shares for the long term. And when it comes to options, of course, we've been buying some long-term dated options, to brace for uncertainty like this. If you have short dated calls, 3 months, 6 months, 9 months out, those could literally go down 70, 80, 90% in no time at all. So guys, we had some long-term dated leaps, and I like to keep my options portfolio to 15% in case the market gets wiped out. I won't be completely wiped out of the market. I'll just lose 15% of my portfolio. So basically what I did was DCA on the options that I liked for the longer term, and I sold some of the higher strike prices for a loss and rebought in lower strike prices. And that's basically all I did, guys. I didn't really make a lot of moves. I just positioned myself for a big, massive rebound, which I believe we're going to get, later on in this year. Q1, 36 days away. I'm really liking, where SoFi is headed right now, guys. Anthony Noto has said 2025, best macro in SoFi's history. I'm very excited. Be sure to smash the like button, drop a comment. Don't forget to subscribe to the channel. We'll be keeping you updated daily. Let's get into the video. All right, guys, after being in the extreme fear mode for the past 6 weeks, tariff related, macro related, CPI, PPI, you can see we finally tick back up into the fear part. So 28 right now. I think we were as low as like 15 or so. We got a while to go before we get back into neutral greed, extreme greed like a year ago. But understand right now, the IWM small cap, that's more correlated to SoFi. It did hit about a 19% correction, but still, as of today, with the bounce back we've had the past week, the IWM is still down 14%. That is literally halfway between a correction and a bear market for small caps. Imagine if small caps, breaks out, we get some rate cuts and it goes green again. I mean, we're talking about a launch for a long time. So I really like where my portfolio is at right now. Down a little bit from the highs of 1842 on the SoFi stock. I think we can punch through that pretty easily and get through that resistance of $18, $19. This is the big news why we were moving today dramatically. White House scales back April 2 tariff plan. This happened last night at 10:52. You saw the overnight trading start to move up. Everyone thought we were going to get a big sell-off like we have the past couple of weeks when we got good news. But man, we just launched through and broke through a lot of resistance. I think the S&P 500 reclaimed its 200-day moving average. A lot of good things are going on behind the scenes. And if we look at SoFi right here, we did a Fibonacci retracement. I mean, 1842 was that high. We hit over here, I think beginning of January, and then we bottomed out about 1085. And this is the level I've told you guys the last two videos that I've been waiting on, which was at 1349. And look at that, guys. We literally broke through that right here pretty aggressively. We're trading at about 1376. So the next level to be watching is that 1465 right here. Maybe this comes later this week, next week, but man, I'm liking where we're heading into this Q1 earnings. 6 weeks away, likely about April 29th, April 30th. Man, if we go higher than, $15, I'll be really happy. There is some people out there saying 16, 17. I'm cool with 15, and let's see where SoFi puts their guidance in for the full year. I think Q1 is going to be an absolutely incredible earnings because you got that big, massive deal, $5 billion loan platform deal with Blue Owl, which the market was selling off the entire time that we finally closed that deal and announced it. I think that deal will get the stock moving up a lot faster because, big institutions and whales out there know the direction of this company, and it's basically the management team, CEO is going after that hybrid multiple, fee-based revenue, getting further away from legacy banking. So take a look at this, guys. I would rate the fee-based revenue right now at an A+++. Tip your hats off to the loan platform business. I mean, $970 million. I mean, SoFi did $2.6 billion in revenue last year. So guys, you can see percentage of fee-based revenue is 37% overall. Fee-based revenue growth, 74%. I mean, just strip out the entire, balance sheet risk banking and just go off of, just making this its own company on its own. I mean, what would you value this company, just off this 970 million, 74% with profitability, on financial services and the loan platform business, 50% margins. I mean, guys, you could value this at a 15 times sales, 20 times sales, 30 times sales, no problem. Just 15 times sales, you're looking at a $15 billion company just valuing off its fee-based revenue on its own. That's why you're seeing guys like Andrew Jeffries out there, saying the top end of this company could be $35. The low end is $25. So he is starting to get it. And you're seeing the other analysts on Wall Street starting to get it because you got 5 other ones at 20. So when this fee-based revenue ticks up another, let's say 40, 50, 60% of this year, I mean, it's going to be 1.5 billion in overall revenue. I mean, you're going to see this, tick over 50, 55% in no time at all. I'm liking where the fee-based revenue is headed. I'm liking the loan platform business, and the loan platform business has so much upside right now because it's basically only in one segment of SoFi, which is personal loans. What happens when they tap into mortgages and student loans? We're talking massive market share that SoFi can go after and just continue to bring in members. Literally last night, guys, I mean, SoFi was trading at 15.5 times. This is not revenue, 15.5 times its EBITDA, guys. Great, great value on a company that could potentially grow 35% this year. I mean, let's say we were trading at 15.5 times EBITDA and the company was growing 17%, 20%. Yeah, it may look a little bit expensive. The risk is there if, growth slows down from 20 back down to 10. But guys, if we're putting up growth like this, I mean, this is like SaaS like multiples we should be getting when you see the fee-based revenue accelerate, guys. I mean, 15.5 times EBITDA is a joke. 30 times EBITDA at a bare minimum. You're looking at a stock price, $27, $28. All right, guys, and I put this out last night. Q1 earnings day will be scheduled in about 10 days. That's why we're, getting the videos ramped up right now because we're going to be doing the earnings countdown like we always do. I think Q1 2025 earnings is going to be beyond explosive. Why do I say that? Website traffic, all-time highs. We saw insane traffic in January, and February was the second highest all time. So remember, guys, $19. We qualify for the S&P 500, and remember, our January high was 1842. So that was where the market makers, out there in top of the macro collapsing. I mean, they just put an end to us at the $1850 level. And guys, I mean, it happened so quick. Of course, I would want to have sold some at the $18.50 level, maybe 20, 30% of the position if I knew we were going to pull back 42%. And then, you buy back some more stock at the $10 level and your portfolio grows. But guys, I didn't have enough time to process the tariffs in the 5-week span. I mean, by the time we got to week 2, we were down 25%. And you can't just go selling for a 25% loss. But yeah, it did pull back further. It's just too hard to time the market in the short term. And if we go a lot higher than 1842, I mean, it really doesn't matter. What I did was, I DCA'd on some long-term leaps, and I also exited some, higher strike prices and brought the strike price down a little bit. That's pretty much all I'm doing right now. I am ready for SoFi to get its fintech hybrid multiple, guys. We're trading at about 4.5 times sales. I like 10 times sales. I think that is fair for what the company is doing. You're doing $3.5 billion in revenue. You're looking at about a $35 stock price. And take a look at this, guys. Quarter over quarter revenue growth is one of the most influential short-term fundamentals to move a stock price. Look at this, guys. Q3 revenue growth, when we just freaking exploded from 10 to 18, we saw $99 million quarter over quarter revenue growth. And then Q4, we saw the conservative SoFi once again, revenue growth, $37 million. It looks like they were just getting prepared for 2025, putting out their guidance. But guys, I believe they're going to, get back to this growth mode that they were in Q3. And if we get some $100 million quarters, we're already about $730 million in revenue, guys. I mean, we could be a $1 billion quarterly revenue company pretty soon. We're going to be on a $4 billion run rate in no time at all. Just in a matter of 2-3 years. I mean, this company's gonna be doing $10 billion in revenue. If you get a 20% profit margin on that, you're looking at $2 billion net income to the bottom line, around the 2027 range or so. So guys, we could be looking very, very good at these levels right here. All right, guys, and take a look at Anthony Noto, what he was saying on that Q4 earnings call. This is Andrew Jeffrey, pretty much giving the highest stock price out of any analyst on Wall Street. This is from William Blair. They don't even really give stock prices on their tip ranks. It's just in their reports. Andrew Jeffrey, Anthony, great to see the mix shift in revenue and the rise in fees as a percentage of the total. Exactly what we were covering in the beginning of this video, $970 million in revenue. Can you sort of, looking longer term, talk about perhaps where you'd like to see fees as a percent of total given your long-term ROE aspirations and what the composition of that fee-based revenue might look like, say either in the intermediate term time frame or even a little longer time frame? Anthony Noto, yes, it's really hard to give a specific number given it's being driven by 5 different sources of revenue. We want it to be very significant. We recognize it's capital light, it's less credit risk, obviously, and it's cash up front, so it's also high ROE. We want to grow it as large as we can. One of the things we contemplate is, could we push all of our lending into the loan platform business over time, and I'm not opposed to that at all. The economics are very attractive. The velocity is much higher. The capital is lower. You have a lighter balance sheet. It would really support high ROE. So, guys, this is absolutely what we want to see, guys. We want to see, of course, their balance sheet, grow a little bit. But, guys, talking about all the lending inside of the loan platform business, guys, you are going to be looking at a much higher multiple than 4.5 times sales. I mean, this is where you're getting to that level, 15, 20 times sales, a complete, fee-based revenue business, scaling dramatically, 30% growth, 20% net income margins long term, guys. Anthony Noto knows what he needs to do to get this multiple up, and this is where he's making that big shift inside of 2025. You're seeing it with the $5 billion Blue Owl deal. I mean, don't be surprised if by the middle of the year, end of the year, we get another, $5 billion, $7.5 billion deal on the loan platform business, and you're going to see us jump into student loans and also jump into mortgages. Guys are very excited. Right now, we're still macro driven, flip flopping back and forth inside of the market. We're going to stabilize eventually, but I think there's a lot of upside from here when you're seeing, IWM small cap still down 14%. If you made it to the end of the video, I want to say I really do appreciate it. I enjoyed doing this video for you. We're going to be keeping you updated on all the breaking news with the SoFi stock and the overall market. Be sure to smash the like button, drop a comment. Don't forget to subscribe to the channel. Hope you have a great day.